actually working for you, right? If your money is just sitting there in your bank earning 1% a year, whereas here you could be earning 20%, 25%. But if you actually educate yourself and learn about options trading and 0 days to SPX, I'm gonna teach you how you could try to make 1% every day, not every year. This is how you can truly achieve wealth in America. You can actually accelerate it. Now you don't have to wait 20 years. You can actually compound your interest on a monthly basis. So instead of 7 years for your money to double, if you know the power of the rule of 72, which tells you how long it'll take your money to double depending on your rate of return, then you can truly build wealth in the markets. So now let's go into a daily chart. You always want to then go in and zoom in and say, what is happening on the daily chart? Because we want to see what is the shorter term trend. We know that there was support and resistance in this big range between 6,300 and 7,400. Once we broke through the 7,400 resistance, now there's just a lot of buyers. There's no sellers overhead and people are just bullish. So now with this big green candle, let's now look underneath the microscope and see what's happening intraday, because you can take advantage on a daily chart, but now with 0 days to expiration options and them lowering the margin requirement from 25,000 all the way down to 2,000, more and more people are now going to have the opportunity to really trade. But the sad reality is most people are going to lose money when this becomes available to them, because they're not getting the education. They don't know how to master the tools, how to put limit orders, and they don't know the strategies that they can use to leverage opportunities in the market. So let's quickly take a look here and see that the market actually rallied as high as 75.17. So this is an all-time high, folks. We have never broken through 7,500 ever. And so we broke through it today and it hit resistance at about 75.15. And you can actually take a look and see why this occurred if you know how to look underneath the price action. Because remember, we always want to look at volume and open interest. This tells you the peek behind the curtain so that you can actually see what is going on, not just the price, but how many people are trading this contract, and volume wise, which is basically how many people are trading it today. Look at this, 150,000 people have traded this call option, right? On the put side, if you go to open interest, you'll see very little puts because the market is bullish, right? We're up 61 points right now. So if we wanted to place a quick trade, let's say I think it's gonna stay below 75.10. I can actually go in here, click on the 75.10, and I'm gonna sell this call. I'm gonna sell it because I don't think it's gonna get above there. Remember, I'm in the business of selling bets that have high probability. So I'm gonna go buy a cheaper one to hedge myself. So I'm gonna collect $1.05, which is $105. This is my max profit if it stays below 75.10. I'm gonna send it through, and then we'll wait to see if this gets filled. So this is how you can actually make money in the last hour. Boom, I got filled right here. See, it says 105 filled. Let me walk you through that really quick here. What you'll see here is your filled orders are right here. I sold this trade for $1.05, which is $105, because you have to multiply everything by 100. Under the SPX, you'll see the orders right here. I sold for $1. I bought for $3.25. Remember, this is a spread trade. And so you'll see that that order is now in the books, and we'll see how it plays out through the last 40 minutes. All right. So now, after you see what's going on, let me show you how you can look under the curtain and say, you know what, which of these open interest strikes have a lot of volume? Okay, wow, that's a lot of volume. 142, what is that? 75.25. I could sell this for 30 cents right now. Let's say I wanted to just sell the 75.20. I can collect $50, but then I got to go buy for $30. So I could collect 20 bucks per contract. If I wanted to up this to 2 contracts, 3, 4, let's just do 3 contracts. I'm gonna try to collect 90 bucks, right? Because 30 bucks times 3, here, 25, I'm gonna confirm and send. See how the max profit is 75 bucks because I have 3 contracts, right? Selling at $25 each. My max loss is 1,400. The reason why you have such a potential max loss is because if the stock gets above 75.20, right? But you're not gonna really lose all that. So I just got filled, right? So it's gotta go way up here and higher, right? So your max loss is only if it gets way above the one that you sold. And the one that we sold was the 75.25, right? Remember, this is the one that we bought. I mean, we sold this one because we sold this one, the 75.20, and then we bought the 75.25, right? Let's double check that. Filled orders. Yep, 75.20, 75.25. So we sold it, which means we want the price to stay below here. The maximum loss occurs if we close up here, but remember, we only have 35 minutes left remaining in the market, right? This light shaded gray area is when the market closes at 1 p.m. Pacific Standard Time. So let's see here if we can get that close. So what I wanted to kind of go over today, remember, I'm all about real trading, real teaching. So I want to show you guys a little bit of how you can place these trades, because when you're trading options, right, these are nothing more than day trades. This bet right here, it expires at the end of the day. That's why there's a big 0 in here. And then these are nothing but bets. If you're bullish, you're gonna bet on the call side, right? See how the prices are getting higher? If you're bearish, you're gonna bet on the put side. See how the prices are getting lower? So you could bet on all of these prices, and this is how much the bet is going for. And these bets all have a probability of expiring. So if I change this to probability, you'll see probability of in the money. See this bet? There is only less than a 1% chance it's gonna get all the way down here. But over here, this 75.05 has a 48% chance of expiring in the money. So whether you win or lose the bet. So you can bet with the probabilities, but what's better is I'll show you how to sell these bets. Because when you learn how to sell the bets, now you have the advantage on your side. So now that you guys kind of got a brief overview of what the market is doing today, we placed a bet that it was going to be bearish, closing below 75.20. Now, let me show you how this game works, all right? So remember, the options market is just one big casino, right? All those are just bets. And these bets are always changing in value every second of the day, depending on what the price action is doing. It's nothing more than betting on a basketball game or a football game, right? As the game gets closer to ending, whether it's the fourth quarter, then the probabilities are gonna change because there's less time in the game, right? So this is why I'm so excited to teach you guys how to trade like a casino, because most people are gamblers. They're in the markets, they're buying options, they're betting on options, right? They're betting on a direction. And if you don't bet in the right time frame, meaning it moved, but it didn't move fast enough, you could still lose your bet. Why not learn how to sell the bet? Now you can actually become the casino where you have an edge. When they say trade with an edge, I mean trade with a mathematical edge. Because I'm a math teacher, I combine my passion for math and my passion for trading. And options is nothing more than a math equation. It's the Black-Scholes model. And wealth is nothing more than an equation. Once you learn what inputs to put into the wealth formula, then you can escape the rat race and really achieve financial freedom, right? Because remember, you guys all, I don't know about Rich Dad, Poor Dad, but he talked about the 4 quadrants. You can either be employed right? Where you're working for the man, but you only have 8 hours a day to actually work. So you're stuck in the rat race. Or you could be self employed, but you also are still stuck in the rat race because if you're not there, the business is gonna fall apart. The only true way to wealth, right? Wealth is just an equation. The only true way to wealth is either you start your own business and then you hire employees to generate income, right? A business that can generate income every month, or you become an investor. This is quadrant 2 and 3. I'm sorry, 3 and 4. And in order to build wealth, you have to be either start your own business or learn how to invest your money so that your money can create income, right? That's called passive income, generating income. The only way you can generate income in trading is by selling options, right? With stocks, you cannot do that with stocks because you buy it and you can and hold it forever. There's no end game. But with options, because these expire, these are just bets. Or you can think of it as insurance policies, right? And an insurance policy will either pay out if you get into an accident, or they're gonna expire worthless if the stock doesn't get into an accident. What if I told you I could teach you how to sell bets, sell insurance just like the wealthy do? Because in reality, if you wanna be wealthy, you gotta do what the wealthiest companies in the world do. You guys know what the two wealthiest companies in the world are? You're right. They are casinos and insurance companies. If you go to any big city, you'll see the tallest buildings, the skyline, they're all either casinos or insurance companies. Do you guys know why? It's because they're in the business of selling probabilities. That's what we are doing. We are going to be in the business of selling probabilities. Because if you know the math behind how probabilities work and how to become a seller, then you can generate income. Because now, if you sell options every month or every day, you can now compound your money like this. And I'll show you how to do that with the wealth accelerator formula. I have a whole pathway that's gonna walk you to achieving financial freedom by generating enough income every day so that you can pay for your expenses, right? Once you can have your money, right? This is the key to escaping the rat race. When your passive income, and what is passive income? Money coming from trading, money coming from real estate, is greater than your monthly expenses, right? Your mortgages, your bills. Once this money, when your money can generate more money, right? You don't have to work for it. Your money is doing all the heavy lifting. Your money is the one doing the work. And then you can compound that. And once you achieve this, once your money can generate enough passive income to cover your monthly expenses, this is when you retire and you can escape the rat race and you can truly pursue your true passions instead of just working a 9 to 5 job just to pay the bills. So if your monthly expenses are, I don't know, in Silicon Valley in the Bay Area, it's about $10,000, right? Once your money, if you can generate $10,000 a month, that's financial freedom. So how do you generate this $10,000? Well, what if I told you that if you generate 1% a day, that is equal to 20% a month, right? Because there's 20 trading days. Most people will say, well, 20% a month is quite aggressive, Nick. Like, really? Do you really think you can make 20% a month? Well, it's not as hard as you think because if you have a $10,000 account, well, 1% of that every day, you divide by 100 is only $100 a day. If you know a strategy where if you have $10,000 available to trade, can you squeeze or sell enough premiums or sell enough bets where you could generate $100 a day? You could. And you don't even have to do it all in one trade. What if you place 10 trades a day, right? Because we're day trading, right? What if you place 10 trades a day that all have a probability, right? And every time you're right, let's say you're right only let's say you're right only 2 times, right? Let's say you're wrong 8 times. Can you still make $100? This is the key to trading right here. If you're right only 2 times, but when you're right, you actually make $500, and when you're wrong, you only lose $100. So basically, you're risking 100 to make 500, right? This is a 5-to-1 risk to reward ratio. You're gonna make $1,000 on your winners. You're gonna lose $800 on your losers. You are net profit $200 minus your commissions, minus your fees. That is how you can generate 1% a day. That is the formula, folks. That is what trading is. And this is why I want to teach you guys this knowledge so that you can equip yourself with the power of education. And then you combine that power with coaching. I'll be there and I'll walk you every step of the way because I've been there. My entire trading journey was the roadmap. I went off course, I went down, I went up, I went through the valley of death, almost quit, and then finally made it to the other side. My trading journey is the roadmap. Now I'm gonna give you the blueprint. How can you actually do this with only $3,000? How can you day trade options? How do you bet on the market itself, the SPX? This is the one of the most liquid markets there are in the world. This is where all the big institutions, the banks, Goldman Sachs, they all trade the SPX. So you're going to be part of the big game. And what's great about betting on the market is that it's fair game. It's not like a casino where there's a 10% commission or a juice you have to pay, right? Here, this is just a bet on an outcome, and you either win or you lose at the buzzer. How are options priced? Super easy. All you have to know is depending on the price of the stock or the index, if it's going up, most likely your option, your bet is going to increase in value. If it goes down, you're going to lose value, right? That's what's called a call put. It depends on the strike price or the current price versus how much time is left in the game. That's your expiration date. And how much fear, right? If there's a lot of fear, then the price of that bet is going to get inflated. That's just called volatility. And what's awesome is we're going to buy and sell these bets intraday, meaning when you bet on a game, you could cash out before the game even ends. It's called cashing out. If you ever play on Kalshi or DraftKings or any of those, prediction markets, you can cash out your money before the event ends. That way, all you're doing is you're betting intraday spikes. Like yesterday, we bet on, Detroit to win the game, right? So I had to bet $100 to win only like 75. But once they were winning and the probability increased, I sold the bet and only collected $35, but my risk was now off the table. You're doing the exact same thing with trading. You're selling something, right? See these are actively moving right now, right? Let's take a look at the chart. Right? I bet it's gonna go down. That trade that I did, right? What did I do? I sold the 75.20. Look at this. And 75.25 because right here, this filled order, I'm gonna create the duplicate order. I sold it for 25 cents. Watch, I'm gonna unlock it. It's only going for a nickel. What does that mean? I sold something for 20, right? I sold that trade, that bear call spread, I sold it for 20 cents. I got to multiply by 100 because every option controls 100. So what is that? You just move the decimal to the right, $20. So I sold that for $20, but I sold 3 contracts, 3 bets. So 3 bets, I sold 3 of them. So by the end, if I sold it for 20, but now it's only worth a nickel, right? I can buy it back for a nickel, right? And then I made a profit of $15. Or I could just let this go, let the game end, and then it'll expire at 0, and then I keep the full 20, right? That's what I'm gonna do, is just let it go. Like, the chance of it getting above there is very small now. That's why this bet is only worth a nickel, right? That's all we're doing here, folks. We are just betting. See how these prices, they're changing 60 cents by 65 cents. The spreads are super tight because this has so much volume. Look at the volume of the contracts. The volume today, 165,000. If we look at actually what's going on in the day, I can show you, just to give you a brief look of how the market maker thinks. You can actually look at SPX touch the 7,500 strike, right? It touched it, you can see volume going up, which tells you how the market maker is thinking and how you can position yourself. Because I'm gonna get a little, probably a little more advanced than need be, but you can look at what's going on behind the candlestick, behind the price action, and see where the market wants to take the price to. It's like a magnet. It serves as a magnet. And so if you know that the magnet is super big up here, it's gonna wanna bring the price up there before it sells off. So that's the name of the game, folks, is how can you take advantage of these premiums, right? These premiums will spike up and then they come back down. How can you sell something for a lot, for like $2.10, which is $210, and then buy it back for 50 cents, right? The game starts at 9:30 and it closes at 4 Eastern Standard Time. There's so many ways to profit from this game. It depends. How can you best position yourself when price is mispriced? When something is too overflated, that's when you want to sell, and then let it come back down, and then it expires worthless, right? Because the 3 variables that cause price or an option to either increase or decrease in value is how much the delta, this is how much the market moves, time decay, how much time is left in the game, and fear, which is volatility. And then as time decays, your option, your bet is gonna lose value, right? The value of your bet is gonna decrease because as time gets closer to expiration, right? Like we saw in this bet right here, look, right? There's only what? Only 10, 20 more minutes left before this expires. From 12:40, it ends at 1. Well, since there's only 20 minutes left, well, these bets, see this 0 days? These bets, there's only worth 25 cents, right? Because the probability of it expiring or winning is so low, right? That, look at this, this only has a 1% chance of expiring in the money. So you're only gonna get 5 cents for that bet. But if you get closer to at the money, 75.05, this still has $2.10. It still has value because in the next 20 minutes, this thing could easily drop probably 2 points, right? So here, let me show you. Let's make a quick money here. Let's go back out and say, okay, you know what? I'm gonna bet that it's gonna stay below. Let's see here. Ooh, let's say we think it's gonna bet. Ooh, look, it's approaching 75. I'm gonna bet that it's gonna stay above 7,500, just above here. It's gonna up here. You know what? I might be able to sell the 75.10. Let's see what the 75.10 is going for. $1.80. All right, I'm gonna sell this for $1.80, and then I'm gonna hedge myself at $1. Then I'm gonna bet that it's gonna stay above 7,500. So I'm gonna place 2 bets. I'm gonna say it's gonna stay above. I'm gonna sell it for 70, buy this for 25. Now I have two bets, collect a buck 50 now, right? So now you can see this has two break-even prices because I put on two different trades. As long as it stays above 74.98 and below 75.11, I'll win on this bet, right? Because I sold two sides of the bet. So let's put this in. All right, so it's working right now. You'll see the orders working on the chart. You have to wait for the price to actually get filled. There you go. We got filled for a buck 45. So we sold this. And what is the bet saying? The bet is saying over the next 20 minutes, are we going to stay below? Let's see here. We wanted to stay below 75.10, right? We sold the 75.10, and then we also sold the 7,500. So that is our prognosis, is let's get it in here in the next 20 minutes. If it works, then I get to win, right, $145, because what did I do? I sold, right? I sold it for that much. So we'll see. So now let's get back to the presentation. So this is basically how it works. For the last hour of the trading day, my goal is to teach you what I'm doing so that you can see that it's possible to make $100 a day, $200 a day with just a $5,000 account or $10,000 account. You know, I challenge you to, instead of putting 100,000 in your 401k, why not just take 5,000 of that and say, you know what, I want to learn a strategy that can actually accelerate my money. Put it aside, trade it using strategies that I'm going to teach you, and that way you can actually have your money work instead of just tying it all up in some big ETF or mutual fund. You don't even know what it's doing, right? Why not educate yourself, take the time to learn a strategy so that you could actually manage your own money, but not just manage it, but get it to make you money every day, every week, every month, right? Because in the end, that's the goal. The goal of trading is so that we can have freedom. We don't have to be in the rat race. We have the time to pursue our true passions. And that's what I want to do. My true passion, I do feel, is to help you guys, to show you guys so that you can do it. All right. So we talked about how to bet and cashing out before the end of the game. That's how you make money. By cashing out early, you actually increase your probabilities because you take out the tail risk. There's no risk at the end where something crazy can happen. And so how to flip the board, how to trade like the casino. Don't be the gambler. Don't be the retail trader who's gonna lose their money, the 99% who's gonna blow their accounts one after the other before they say it's not for me. Why not think like the casino and also think like the retailers? Because once you think like a retailer, now you know how to take the opposite side. The retailer has one big disadvantage going for them. You know what their big disadvantage of a retail trader is? They get emotional, right? Their emotions always blow up their account. It's not so much the strategies, but it's the fear and the greed, right? You cannot win in the long game of trading if you allow your emotions to dictate your action. Because true trading discipline is when you have the ability to act regardless of your emotional state, right? Most people are afraid to step up to the plate when it takes courage to say, you know what? I think this is overpriced. The fear is overpriced. I'm gonna sell you this insurance policy because I don't think it's gonna happen, right? And for you to take that courage to sell it, you get paid handsomely because you're gonna get an inflated premium. You're gonna be able to sell insurance when you know there's a hurricane coming and everybody needs insurance. Well, guess what? They're gonna pay way more for that insurance because the probability of that hurricane hitting is high, right? Because life is all about probabilities and payouts. You just got to be on the right side of that payout by knowing your probabilities. The player versus the house. The player is the one that always bets. They're the ones trying to say, you know what, I predict the stock is going to go here, or I predict the stock is going to go down here. Well, guess what? The sports book says, I'm not going to predict where the stock is going to go. I'm going to predict that the stock is not going to go here, or the stock is not going to go down here. See how you have a higher probability? You're held when the clock ends, and if the stock doesn't get into an accident, you win and you collect their premium, right? The player, they lose their premium. So let's say they $100 bet. Well, guess what? In every bet, it's just a transfer of money from the loser to the winner. And the question is, what side do you want to be in? Do you want to be on this side where the probability is less than 50%? You have a negative expected value, meaning the minute you walk into the casino, they already know that you're going to lose about a certain amount of money because the math doesn't lie. But if you become the casino, instead of collecting and paying out that juice or the VIG, you get to collect the VIG up front. Time, right? You're selling time, and you're selling volatility and fear. Volatility is just a fancy name of saying fear. So when you are selling time and volatility, you now have the edge because time is always ticking away. The more time that goes by, the more premium gets sucked out of these bets, right? Because look, the trade that we just put on, right? Notice these bets, the time that's left in these bets, now it's only worth $1.35 because there's only 10 more minutes left, right? So look at this bet right here. The 75.10 that I sold earlier is worth $1.25 and it's shrinking, right? Everything above these bets that are higher, of course, are going to be worth very little because the chance of it getting there in the next 10 minutes is very little. Same thing on the put side, right? These bets are worth they're nothing. They're worth nothing because who's going to bet that it's going to crash all the way down to 74.35, right? But the bets down here that are very close to the current price still has a little bit of time value. See this $1.70? That's all time. It's called extrinsic value. You're just betting. That's how much the probability of it closing below 75.05 has a 38% chance. Right? So you look at the price and you're like, okay, what's the chance of it closing way down there? It's lower than 50 because the price is up here. All right, so look, it's going down. Let's just say I think it's going to close lower than this. I can go in and place a trade real quick. I think it's going to go lower. I'm going to buy this one for 80 cents. Boom, watch. I'm buying the 7,500 for 80 cents. Just see if it goes down to 7,500, right? Where's 7,500 is right here. So we have what, 10 minutes? Let's see if this plays out, right? Over the next 10 minutes, is this thing gonna get below 7,500? Well, look, the lower it goes, the more money that trade is making because the probability of getting there, see, watch, I'm already making money because now it's way down here. Even though it's not at 7,500 yet, I want you guys to pay attention to this because people don't understand how intraday probabilities work. So even though we're not down at 7,500, because price moved, I bought it for 75 cents. So that was a working order. So see how it just automatically got filled? How you trade is you put in a working order and you wait for the price to actually hit it. And so you don't actually have to stare at the market every day. That just automatically filled me when the price did it, right? So what did we buy it for? We bought the 75. Look, it's worth $1 right here. Let's see here. The filled orders, create opposite order. 75, it's worth $1, right? Boom, it's going down some more. I bought it for 80 cents, right? Remember we bought it for 80, now it's worth $1.45. That's almost 100% return. Why? Because look, it's going down. Now it's below 7,500. The more it drops, the more money I make. because look at this trade, right? We bought it for 75 cents. If I create the opposite order, I can sell it for a buck 55. Here, let's say a buck 65. Let's say a buck 70. If it hits a buck 70, I'm gonna sell it. So here, I'll show you, right? Watch, it's working right here. If it drops and this option bet, look, it's gonna fill, watch. And then I made over 100% return if it gets filled. So if this thing drops another what? Probably another point, the probability is gonna increase. Let's see. And you'll see me lock in the profit. Boom, I'm locked in. See that? I just sold it for a buck 70. How much did I buy it for? I bought it for 80 cents. That's 100% return in what? 3 minutes, right? If you look at the trade tab, look, the filled orders. I bought this thing, right? So if you look, I bought this at 12:50. That was 1 minute, folks. That wasn't even 5 minutes. What am I saying, right? Look at this. I bought it at 12:50. I got out at 12:51. Look at this. I bought this put for 75, sold it for a buck 70. $75, sold it for 170, right? Look at this trade right here. This is a review of what went on. Here, we got 5 more minutes, but you could trade the spiders, right? And the trade I put on earlier in the day was here, the SPY. ETF, I sold 200. Oh, that was from the previous day. So now look at this trade. It's going down, right? Remember I sold the 75.10 earlier? Well, guess what? That 75.10 right here, I sold it for a buck 45. Now let's see how much is it worth. It's only worth 65 cents. I could lock it in right now or just let it go. If I lock it in right now, boom, I'm out, right? So what I just did was I exited the trade before the game ends. What does it do? It takes the risk off the table, meaning that now if for some reason it goes all the way through 75.10, I won't lose any money because I'm already out of the trade, right? I sold this one. So basically, for some reason over the next, but if I didn't think it was gonna get there, I could have just kept that whole 70 cents and just let it ride and collect that extra $70. So we got 5 more minutes for it to see if it wants to close higher or lower. So that's how you can make your money so, to generate income so fast, right? You just got to know how to position yourself. You're just betting on short-term price movement. What are you betting on? You're betting on the S&P 500. This has the most liquidity in the world. And as an options trader, we want to be the house. You can be wrong on direction and still make money. Do you guys see that? Here, this is a key point. One of the greatest reasons why I love trading options is because I could actually be wrong, right? Let's say I sold. What did I do? I sold this one. I sold the 75.10. I thought it was going to go down. What if it went up? But guess what? I could have been wrong. As long as it doesn't go up past this point, I could be wrong directionally and still make money. Because if it doesn't get into the accident, I collect that whole premium. It still goes into my pocket, right? So that is how you put the probabilities on your side. You can sell bets that give you like an 80% probability of success. How do we do this? We become the casino by collecting the juice. We want to sell the juice. What is the juice? That's time, right? That's time and fear. When you know how to sell time and fear, you can now become the sports book. And then you can cash it in. And you don't even have to wait for the game to end to cash it in. So that's the challenge to you guys, folks. Do you guys want to be the gambler, just betting on sports, betting against the house with the edge against you? Or do you want to be the professional trader who knows exactly why they're getting in, what their edge is mathematically, and how to put the probabilities on your side? Because that's all it is. Trust the math, trust the mechanics, and most importantly, trust yourself. so that you have the discipline to follow that. So I'll see you guys in the next video tomorrow, same time, same place. Make sure you guys subscribe, hit that like button, help me, get this in the algorithm so I can help spread this information to more people, because I feel people need to know this so that they can put their own financial future in their own hands instead of relying on the economy and other people. So if you agree with that and you guys want to join me, I appreciate it. Peace.